Good afternoon. It's Jeffrey Christian of CPM Group. It's about 3:10 on Monday, the 18th of December. I'm recording this for release on Tuesday, the 19th of December, because of our scheduling on Tuesday morning. What I want to talk about today is I want to review 2023 and talk a little bit about our schedule going forward. As we all know, gold prices and silver prices both rose sharply in the first quarter of this year. Then they came down until third quarter, and they have started to rise again in recent weeks and months into December. Gold reached a new record high, breaking above $2,100, getting to about $2,152 on an intraday basis for about 20 minutes on Sunday night, December 3rd. It's come back down and it's been trading around $20.37 since then. The price will probably average something north of $1,950 for the full year 2023. That will be a record price. It'll be, I guess, the third year of record prices in a row, and we expect further prices next year. But that's a subject for later. Silver prices rose, came back down. They've risen again. They've gone up to over $26 briefly in early December, and they've come back down. They're trading, I think, around $24.50 right now. Not as dynamic as gold. That reflects a couple factors. One is that more people in more parts of the world are buying gold as a financial asset and as a hedge against currencies and stock markets and recessions and other economic things that they worry about. There are more people who turn to gold than turn to silver in terms of dollar values and volumes, so that you've seen a stronger focus on gold on the part of investors. And you've also seen a lot of investor selling. We've been talking about this and reporting about it since the early part of this year. People who sell precious metals to retail investors were poo-pooing it, but you're now starting to see a much more broader discussion in public by coin dealers and others about the fact that they're not selling silver, they're buying silver back from investors who have been disappointed and in many cases feel that they've been lied to and misled. So that's gold and silver. Before I go into platinum and palladium, I'll talk a little bit about the underlying economic environment and political environment that we've seen this year. I won't bore you with details. Mostly it's things that didn't happen. On a positive side and on a real side, we had stronger economic activity in the United States and some other countries than most of us expected. We saw interest rates pause in the middle of this year, as many people in the mainstream economists and others had expected, and as the Fed and other central banks had indicated would likely be the case. There were a lot of gold and silver promoters, as well as some quasi-mainstream economists who refused to listen to the Fed and other central banks. I guess they've maybe been disappointed. But the Fed has basically done what it said. Fiscal policy has been a disaster. It continues to be a disaster. We continue to have a terrible war of the Russian invasion of Ukraine. And now we have a Middle Eastern war between Israel and the Hamas terrorist organization. China's issues related to Taiwan continue to hang over the world. And then we have a lot of domestic political problems in the United States, Canada, Europe, the UK, Russia, and other countries. So there are a lot of things that didn't happen that some people thought would happen. And there are a lot of things that did happen. Going into next year, we're looking at a relatively strong economy. Expectations are that economic activity will weaken and weaken significantly. It wouldn't be a surprise to see a recession emerge at some point of 2024 or 2025. The question is how deep and prolonged such a recession might be. Given the strength that we've seen economically over the last year or two, The expectations, our expectations at CPM Group is that the recession actually might prove to be a lot more shallow than we had anticipated and a lot less frightening and concerning to investors, which could limit investment demand for gold and silver. Remains to be seen. And we'll talk about that later. In addition to talking about a wrap-up of these years, I wanted to talk a little bit about what you should expect from CPM Group's videos next year. But let me run through platinum and palladium first because it's relatively easy. These prices have been weak. They've been weak because of cyclical and long-term secular changes in the demand structure on platinum, palladium, and rhodium. Platinum, palladium, and rhodium all have as their primary uses the use of them in catalytic converters to clean up automotive exhaust when you're burning diesel or burn. We've just completed our 96-page report on Platinum Group metals with projections of supply and demand and prices under different scenarios out to the year 2050. We've got a working title of Turning Tides because for the last 50 years, the growth and use of PGMs, platinum, palladium, rhodium, in autocatalysts has been the dominating factor in these markets. Over the next 25 to 50 years, a reduction in the use of PGMs and autocatalysts is likely to be the single most important factor. And we spend a lot of time looking at the future courses of automotive propulsion technology in that report. So that's sort of where we've been. We've seen platinum and palladium and rhodium prices reflecting the weakness in the auto industry's demand for these metals. The other side of the equation is you have to watch out for declining supply, and there may be a mismatch in that supply may at times decline faster or sooner than auto demand, which could lead to periods of price strength for some of these metals. Remains to be seen, and that's the future. Now I'm talking about the past. Our goal, our plan, is to wrap up the year with this video for release Tuesday the 19th of December, take a couple weeks off for a year-end break, and come back on Friday the 5th of January. That video we plan to devote to our 2024 outlook for gold and silver and possibly platinum and palladium. We want to keep it shorter. There are a lot of topics that we want to touch in future videos over this year, coming year. We want to try to make these videos shorter and more digestible. So, for example, there's one topic which is 20 some odd years ago, Carlos Sanchez, my partner, and I had a meeting with one of the smartest people running a pension fund that we've ever met worldwide. And she said, here are 5 questions that I want answered. People, this was like 25 years ago during the commodities super cycle, and every bank and broker in the world was saying that commodities would go up and go up forever because of economic growth, blah, 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 blah. And she said, here are 5 questions I want quantified before I invest in commodities. And none of these banks and brokers are addressing them. So CPM Group said, well, here's a 6th one. And then we addressed them. And I plan to discuss that in a video early next year and itemize those 6 issues. These are the 6 issues that you ought to pay attention to if you're deciding to put commodities, not just precious metals, but commodities into your investment portfolio. And talk about the 6 briefly in a video, but then cover each of them in subsequent videos. That may take a quarter, it may take the full year, but we'll have this package of videos available on that. We've also been asked repeatedly by several people to talk about above ground silver stocks. There's a lot of speculation as to how much refined bullion actually exists in refined bullion bars and coins above ground. CPM Group has that data in our Silver Yearbook, $160 book. Some people have actually bought it and they understand it. It's the best data around. In 1992, when the Silver Institute wanted to do a study to show that CPM Group was wrong and there were billions of ounces of silver in above ground inventories, they went off and they tried to find somebody to do a study on above ground inventories of refined silver. And of the 6 companies, I think, that ultimately bid, 5 of them said in their proposal, we will use CPM Group's data because it's the only data around covering above ground silver inventories and historic metal. And they're the only people around in 1992 who actually are studying these markets. The other would-be research groups did not exist in the silver market back then. So they commissioned a study, and they used our data, the analysts who wrote it, generalist consulting company. We've been asked repeatedly by people to address the subject. As I said, we address it every year in our Silver Yearbook, but apparently some people would rather watch a video than read. So at some point, hopefully in the first quarter, we'll address that. We also will talk about Platinum Group Metals' long-term outlook. We have our long-term report, which we just finished up. And we'll talk a little bit about our expectations. As I said, the tide is turning in the PGM markets. And investors and producers and smelters and processors ought to understand that. I think some producers understand it, even though they don't want to admit it in public. Smelters and processors and industrial users understand it, and some institutional investors understand it. But we'll talk about that. Perennial topic, central bank gold, and then silver and solar panels. There's a lot of hogwash going around in the markets right now about how much silver is being used in solar panels. Solar panels are the foremost funded and operative form of new energy technology to address global warming and the emissions of greenhouse gases. Silver use, we had used industry projections in our Silver Yearbook when we released it in May, and we are working on a study right now, updating it. The solar panel industry acknowledges that they have been producing a lot more solar panels this year and that they're using a lot more silver. It's nothing like some of the things that you hear on the internet, but at some point in the first quarter of next year, we hope to deal with that. So there are a lot of topics that we have in our list of things to talk about next year. And then there'll be any number of topics that will come up. Many times you've probably noticed that we will come on to our videos and say, we wanted to talk about X, but given that Y has happened, we think we need to focus on that. And I'm sure that the market will be consuming a lot of our attention over the course of 2024. And I wouldn't call it a distraction because that's what we're here for. That's all I have. Have a good time for the rest of the year. Take care. If you're like me, you're going to want to relax, but you're going to spend most of the time cleaning up your desk and working on trying to reorganize all the things you didn't get accomplished in 2023 and the previous years so that when January 2nd comes around, you're ready to get into the saddle and start galloping again. Take care of yourselves over the next 2 weeks, 2.5 weeks. Enjoy yourselves. Try to be nice to other people. Try to do something good for the world. And buckle up because 2024 is going to be an interesting year. Take care.